Smart money is not smarter than you. They are just earlier than you. And sometimes, they are using you. Every time the market pumps. Every time Twitter gets loud. Every time YouTube thumbnails scream, this is it. Someone is preparing to sell. And most of the time, that someone is not you. Today, I'm going to show you how smart money dumps on retail investors. How they create the hype. How they control the narrative. And why you keep buying at the top without even realizing it. Stay with me. Because once you see this, you can never unsee it. Let's start with a simple truth. Markets move in cycles. Accumulation. Markup. Distribution. Crash. Smart money accumulates quietly. When nobody cares. When the news is negative. When influencers are silent. When prices are boring. That's when they buy. Not when it's trending. Not when your friends are posting profits. Not when your taxi driver is giving coin recommendations. They buy when you are scared. Then comes the markup phase. The price starts rising slowly. No hype yet. Just steady movement. Retail ignores it. Then suddenly, boom. Big green candles. Breakout levels. Influencers wake up. Headlines appear. This coin is going to $1. This is the next 100x. You're still early. And now retail investors enter. But here's the part nobody tells you. Smart money started buying months ago. At 10 cents. At 20 cents. At 30 cents. Now the price is 80 cents. Retail feels late. So they go all in. Because they don't want to miss out. That feeling has a name. FOMO. And FOMO is liquidity. Liquidity for who? For smart money to sell into. This is called distribution. The price is still rising. But behind the scenes, large holders are slowly offloading their positions. Not all at once. Slowly. Carefully. Into your excitement. You think the breakout confirms strength. They see it as an exit opportunity. You see opportunity. They see liquidity. Then one day, the buying pressure slows. The hype fades. Volume drops. And suddenly a red candle appears. Retail says it's just a dip. They buy more. Another red candle. They say, discount. They buy again. Then panic begins. Stop losses trigger. Leverage gets liquidated. Fear spreads. Now the same influencers who screamed, $1 soon, are quiet. Or they say, zoom out. Meanwhile, smart money? They are in cash. Or already accumulating something else. And retail is left holding the bag. This cycle repeats every single market cycle. Not because you are stupid. But because human psychology does not change. In fact, round numbers are often where reversals happen. Because that's where liquidity sits. And who provides that liquidity? You. Now here's the most important question. How do you stop being exit liquidity? First, understand market cycles. If everyone is euphoric, be cautious. If everyone is depressed, start researching. Second, stop chasing vertical candles. If a coin just pumped 200% in a week, the easy money is already gone. Third, study volume. When price rises but volume weakens, distribution might be happening. Fourth, detach from narratives. Every cycle has a story. Metaverse. Meme coins. Layer 2. Real-world assets. The story changes. The psychology doesn't. Smart money sells into narratives. Retail buys into them. Fifth, have an exit plan before you enter. Don't say, I'll see how it goes. That's emotional investing. Define levels. Take partial profits. Remove your initial capital when possible. That's how professionals survive. Here's something powerful. You don't need insider access to win. You just need patience. Smart money wins because they wait. Retail loses because they react. The market is not designed to reward excitement. It rewards discipline. If you learn to think like liquidity instead of emotion, you stop feeding the system. And when the next big pump happens, instead of asking, should I buy? You'll ask, who is selling to me? That single shift in mindset can protect your portfolio for years. Because the goal isn't to catch every pump. The goal is to avoid being the last buyer. Remember this. Smart money doesn't dump on you by accident. They dump on you because you are predictable. Break the pattern. And you stop being exit liquidity. Because in crypto, information is profit. And ignorance is expensive. If you don't want to be exit liquidity again, like this video and subscribe to Crypto Palace. And share this video someone who keeps buying the top. Because smart investors move early. And this channel helps you think before you click buy.